A microphone check, please, and screen share check. Microphone check and screen share check. Okay. All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast, May 16th, 2022. I'm going to start off with the sniper trade of the day. So this is IWM. I think it's on 1 minute. The 1/10 of the R stat is is 50 cents. Wait about 20 minutes, 30 minutes. Simplified screenshot. See a Kata 2 developing. I take that entry with a let's see. Let's try a standard risk box here. With about that much risk, the usual. I'd like to see it get above this blue line before I feel like it's free and clear. By the time it gets to the blue line, if it gets to the blue line, I should be at no lose plus dinner for 2 by then. Or now. Take your pick. If I were trading it the way I feel right now, I'd be probably like that. I didn't do that, but that's what I feel like. Still feel pretty good about that exit, though. Gave back way too much on that one. And that second entry would have been reasonable. Missed the entire move down. See a bottom, a higher low being put in here. So if I just draw that across, see like another Kata 2 forming. Something like that. Stuck around too long, had a micro loss, about half an hour. See a higher low being built. So I'm waiting to see it come off that bottom. I should be getting ready to enter pretty soon. See a second higher low and get that, and it's cleared the top of that previous hump. So that feels like a reasonable Kata 2 entry. Gave back a lot. So this one ended up making about, let's count it up, 1, 2, gave back a half, and made about 1. So 2, 3. So about 2.5 R on the sniper trade of the day. Simplified screen. All right. Yeah, that was on the 1 minute. I can't wait longer than a minute. 50 cents on the R stat. I said that. Daily market health check. So we had kind of an inside day today. Gave back a fraction on the S&P. You can see the daily range in the yellow box. We're still about 16.7% off the swing high to the close. The short-term momentum is up. You can see the 5-day volatility is about 5%. The 10-day range with about 10.5 or 10.2%. PSAR is still in place. Dragon, River, RL30, RL10 in the winter, everything pointing down, except for short-term momentum, which is hesitating. So this is such a critical state here. Small range day in a average range 5-day at the tail end of this vicious down cycle. So anything that goes south out of that yellow box is an instant short. It's bearish volatile. That's the instant short. It's a tentative long if it can get out of that yellow box to the long side. It has to get through the Dragon, through the PSAR, to the Bollinger Band mean, to the RL10 before there's anything like a persuasive move. All right, quick look at the sectors. The S&P was down 0.4. The Russell was off 0.48. The Qs were off 1.16 on the losing side. Slightly better than the S&P. Emerging markets at 0.4. Treasuries at 0.1, almost flat. And the diamonds were the only prime index in the green at 0.17, so not much to choose from. Since tomorrow could be a miserable down day, we'll take a look at the downside sectors first. The Russell was off 0.6. Marijuana, finance, and tech off to 0.88. Lithium, the FANGs, clean energy off 1.45. Moonshots, Bitcoin, consumer discretionary, genomics, blockchain, Ethereum off 4.4, global future of finance off 4.9, VXX off 4.9, ARC Innovation off 6%. Then individual targets that just got obliterated today. Bakkt off 12%, Coinbase 9%, Rivian 6.9% off a good day yesterday, Tesla down another 5.88, down to 7.25, Robinhood 5.4, Squarespace 5.29. So that's the contributors to the global future of finance getting slaughtered. PayPal off 1.5. Apple down 1.07, Cliff off 0.55, and U.S. Steel off 0.4. So all the metals getting smashed today. For Nick, this column here gives you that range stat divided by 10 as a quick and dirty math calculator for the intraday. All right, the sectors that outperformed. Biotech and materials only down 0.2. Lumber, flat. Simon Property Group, the commercial real estate, 0.8. That's actually a symbol, sorry. The other lumber, 0.22. Wheat and precious, 0.4. Consumer staples, 0.45. Brazil, 1.4. Blended commodities, 1.6. Mexico, 1.8. Oil, 2.25. Oil exploration, 2.3. Energy, 2.6. Agriculture, 3%. I think we've said that before. Watch them. And then the blended large cap crypto, the only crypto that had anything like the juice today, up 5%. Alcoa bucked the trend in the metals, up 3.34. Devon Energy on the strength in the energy sector, 3.3. Microsoft and Simon Property Group up 0.15 and 0.08 respectively. So mostly your energies and internationals and inflation-sensitive things like stable commodities were looking pretty good. So most of the disruptors and the groovy symbols all got slaughtered today. That's the way to look for tomorrow. Let's take a look at the reports real quick. Oh yeah. Alrighty. Let's see. Sheeps. Still bearish volatile. This little 3-day bump is starting to run out of gas, but the long term is still decisively oversold. Risk Z still warning us about downside. What it would show me is what was on the chart yesterday. And it always has a favorable intraday. It's a frog champion, so it's always tradable intraday. When you're trading with a risk box of 1/10 of a range stat, it's always tradable on 1 minute intraday. We should be following the market narration right now to try to get a feel for the flow of the mosaic. Note those questions for after. All right, Max Payne's Tesla, Boeing, American Express, Alcoa. So the Max Payne and Alcoa is interesting because it's so far from its 10-day high that it's a big percent loser, but today it was a good winner. So we should be alert to the possibility of a lot of specific trades targeting Alcoa, not because it's a metal, not because it's the sector, but because Alcoa is in a critical state. So we'll take a look at that one shortly. The min pains in the Dow, Merck, Travelers, Coke, Pfizer, and Verizon, those have been constant for the last 10 days or so. So that's part of the strength of XLP. Lots of good auto framers today. You're going to get that when you are so far off the 10-day high and it was a relatively low range day with plenty of dojis in the Dow. Boeing is especially suffering. In the ETF tactical, a lot of dojis there as well. Range compression. That helps support a lot of auto framers in good shape. Oil and energy. Were the outperformers today. Oil exploration also very good. So I'll be looking for Devon Energy, DVN, tomorrow as well. It's a buyer's market in the auto framer with so many things above 2 to 1. I like to start at the top and read down to look at the ones that have the biggest reward to risk to the upside. But if they fail below the initial stop level, then that's an indication that the big fail is continuing for them. So they become high priority trades. So IWM, XLK, automatically in good position to trade in either direction tomorrow. Very liquid, very volatile, and can pull the rest of the market with it. So you get to see a lot of momentum trading in those. And there's IWM at 4.2 to 1 in terms of reward to risk to the 10-day high. A handful of good ones in the daily squeeze. Now you get the squeeze when today's range compression is small compared to the range stat. So what you're looking for to get highlighted here is the range stat divided by my risk. And the my risk comes from this column, which is the middle value between the minimum a quarter of an ATR and a full ATR, or the range risk itself, whichever value there is in the middle. And it's almost always going to be the range risk or or a full ATR, whichever one is less. That's going to be the number that gets reported as my risk. And then you take the range stat, divide it by that, and then if you have better than 2 to 1, it highlights. What that means is that you have a range compression setting up. So this is a quick and dirty way of finding symbols that are compressed into a critical state. Again, what that'll give you is you'll have some normal ranges, and then if you have a small doji, and if the doji is your risk, then what we're looking for would be a breakout above today's high or a breakdown below today's low, and then using that yellow zone as the risk. And then if it makes a range stat move, from the top divided by the risk, that gives you the ratio. So if there was an expansion in either direction out of that doji to the size of a range stat, you would get this ratio. So IYR, for instance, has compressed to essentially 1/3 of a range stat, which means that it has a 3 daily range move. That's how you get the 3 to 1. So what we're looking for is, after a period of normal ranges, a really tight compressed doji. We think that it's acting like a coiled spring, and then we're treating that as a critical state and trying to play a large breakout out of that yellow zone. So when it's compressed that much, it's hard to get a trade in between yesterday's high and low. So just by waiting for the breakout, that's where you get the best payoffs. Okay. Godzilla setups. Twitter's in the number one position in the bottom 16% of the long term, at the very bottom of the 30-day range, bottom 1% of the 10-day range, and a 3 sigma range expansion. So that's pretty amazing. And then you got eBay and Apple, 2 large liquid techs, Microsoft in the Godzilla, Disney and Boeing. Plenty of good targets for tomorrow. Tesla. Lots to choose from there. So you're getting a combination of extreme locations extreme location plus extreme 5-day volatility. And that's what gives you the Godzilla. We actually had some fireworks today. ExxonMobil and Chevron. I don't recognize PXD. I'm sure it's somebody. So these are the energy stocks that are extremely overbought on all three time dimensions, plus range expansion over the last 5 days to the upside. Fireworks ready to go, boom, instantly follow them. A number of fence sitters, and these are the ones where the weekly and the daily trade location are right smack in the middle, around the 50-yard line. So they're poised to go in either direction. And these exceptionally volatile ones have already started to move. And then these quiet ones have not yet begun to move. And that's the ones that are really interesting for an options trader. I would probably add CL to that one, Clorox. Because it's so quiet, it's hush, ready to explode and catch people by surprise. So the options players should be interested in those. The pure quiets, these are the ones that out of the S&P 500, sorted by quietest volatility, and I would probably just draw the line somewhere around in here. And then anything less than 1 is especially quiet. Notice Pfizer's in pretty good shape. Johnson & Johnson, Chevron, holy mackerel. All of these extremely quiet, ready to break. How they can be that quiet during these volatile times is a good question to ask. This is the standard set of symbols right here. I've sorted it by the percent changes, so you can look for the momentum plays, probably something like that. And then you can look for the favorable reward to risk ratios as a test of the 10-day high, plus the range compression ratios. So Alcoa is really interesting. It's 2.6 to 1 and range compression breakout of 2.3 to 1. And it only has a 60-cent MMRB on the 1/10 of a range step. That's interesting. Lumber is interesting at 3.7 and 1.2. Materials, which is interesting because the metals got smashed hard today. Like you see, where were they? You saw Cliff and U.S. Steel all much worse, and only Alcoa was strong. So the XLB could be in a real position to move north tomorrow. If you saw strength in U.S. Steel and Cliff, then you might be interested in seeing if XLB is better. Then that would be the safest bet. The last couple days of failure to fail has given us some hope for the spring, and mostly energy and materials, and a couple staples in the summer, but otherwise being dominated by winter. Mostly energy on the 10-day NDX. You can just see the difference that getting your sector allocation and understanding right, why that's so good. If you were just randomly in the wrong things, you're getting smashed. But if you're in these, healthcare, energy, staples, you're not doing too bad. Paying attention to sectors and market conditions makes a long-term difference. This is such a normal move that you can just see how everything is pushing it down, and then the rebounds last maybe 1 day or 2 days on the far side of that regression line before they fail again. Here it comes up, and today was a doji, so a continuation to the downside would be the least surprising thing. The slope of the RL30, it's not even close to reversing yet, and it's 2 sigma away, so it's extremely down and suffering. Hasn't crossed and given us the possible alert signal yet, so the default direction is down. With no help in sight from the administration. So this is what a normal failure to follow through looks like. It didn't follow through today. And so a breakdown below that would be the least surprising. All right. Excuse me. That's everything from the reports. Let's take a look at the traders. Here's Bill with Proctor on a 10-minute. Starting in the morning, here's the PSAR reversal. Plays when the RL10 leaves the dragon, he goes ahead and plays this one. It'd be very close to the I'm sorry, that's where the PSAR flip did occur, right in here. So he's good to go. Standard risk to the bottom of the dragon. He was away from the keyboard, or he might have added a second position here. Plays this one, I guess trailing with a wrist box, or came back and said, that's enough. 3 1/4. He was busy today. Nothing wrong with that. You're allowed to just come in and take what you want and then leave when you're satisfied. You're allowed to do that. Marius, quick exit, good stop and reverse, kind of like a 1, 2, 3. Got paid a little bit. Second position, this just doesn't trade during your waking hours. I mean, that's just on idle. There's no edge in there. Trying to squeeze something out of this, man, I don't know. Why you're not trading the currencies like the Aussie dollar, I don't know. There's just no overnight movement in that. This gives you a little more room now that the market has woken up. This is a hard to see, but that's a lower high. Stuck around too long, the PSAR flip here would be enough to get me out, and then a stop and reverse would get you an entry here. So less of a loss and more of a gain. That's a good exit. That's a good stop and reverse. Good second position. Good scratch. Gets paid. Good scratch. Gets paid. Gets paid. Gets paid. So that's about, let's see, those two scratch, that's 1.4, and 0.9 is 2.3, and 9 is 3.2. Do an old fat man a favor and just give me a total on those for your net at the end of the day so you can have a daily R, or you can watch me do math in public. Arch. This is what I think, the same time frame, you could be trading these things when the tech market is asleep. Two basic scratches, good stop and reverse, gets paid. That's an aggressive effort. I wouldn't stick around 3 bars and then get short. I might be ready to get short after 1 bar, especially after a move like this. And then that second one would pay. Scratch, loss, loss. This is the one after you've got 3 trades in here where the market is compressing but not yet compressed. And then after it compresses and begins to expand in its direction, we don't get in until here. So don't trade in Crocodile River for minus 0.9, 0.6, and 0.9, 2.5. And then you'll be ready for this one and get paid. So 1.4 should have been around 5. Don't trade in the Crocodile River. Here's Tim. Here's 5R on the micro on the 5-minute. So here's one that actually does trade enough rather than the narrow tech sector. Marius, you and Tim ought to be combining forces and figuring this out. Here's a great collapsing dragon short, gets paid. Good SSC, quick exit. I think you can get that short right away instead of waiting for this, because you have a COTA 2 entry right there. Then that gets paid. This is getting paid and getting paid. Pretty good. Your skepticism allowed you to at least get what was available. This was a good short. This took way too long to get out. You let it cross all the way across the VWAP. Still got paid. This was... I don't mind this one waiting for the VWAP to get crossed, because that was enough of a move up that I'm not instantly wanting to get short. I don't mind waiting for the crossing of the VWAP. You got paid a little bit, got paid much better. Now notice how he's not trading in a compressing river, but he does get a super pinch, and now he's able to catch that on the way up. And then the super pinch leads to almost like a fake 1 and go 2, and he gets paid. Quick scratch, missed this one, got paid. So 5R, this could have been maybe 7, but that's pretty good efficiency all the way through. Now, Marius, I'd be looking hard at that index, and I'd be looking to partner. All right, this is the ultra short Dow 30. This is as sideways a river as there can be, and you are trading between +1 and -1. This is so much in the noise that we should not be trading this. The soonest you should be thinking about this is at the Z2 break, and you could get paid to here and then a PSAR flip to there. Don't trade in Crocodile River. Get rid of the two-tone PSARs. It's better than yesterday. We had 3, so that one gets paid. Okay. All right, this is let's see. Okay, Estee Lauder. All right, so here's the opening. I guess that's the opening. So it opens right here. I don't see the signal to go long. But if you do go long, we let this go to Z3 and lower and then exited here. I don't understand that one. So the entry, you say the entry rule was a 1, 2, 3. I don't see a 1, 2, 3 here at all, except getting short here. Now, this violation of the PSAR dots, that's a legit reason to get short, and that one would get paid. This second trade that rolls over, I don't see any entry pattern that I recognize there. At least it's a quick scratch. This one is a low. Here's a 1, 2, 3 and a crossing of the VWAP. One of these two is whichever PSAR is the correct one is the correct entry, which would get paid. And then the exit should be about here instead of in that bar. So we got some work to do. This looks like you've been in a hurry to trade. You should have in your mind the student that you're trying to teach your lessons to and explaining to them what it is that you are doing in language that is absolutely clear to them. All right, here's the SSC only in EWZ. I might have, I know you didn't start trading this one until now, so we couldn't have gotten that SSC. But if you saw this, you might say, well, I just have a late SSC entry and you've gotten credit for all that. This is not really much of a harsh winter. The SSC is slow. It should be here. Then maybe I think your exit should be there, although you're doing the way. Although if you look at your rule set, we should be out by there. This SSC, okay, I'll give you a credit for that one. And then we're going to see in the next chart that that's a automatic stop and reverse. Collapsing dragon only. Gets all that money back. I think a little slow on the exit, although that's a way, so that's fine. And that gets paid, and then that one crushes. This one was getting close. When this goes here, turns to winter, in your discretionary account, you might be persuaded to do that. But that's still pretty good. The integrated trades, the 6R, when you add all the COTA 2. COTA 2 is so clearly a value add that you should have that committed to memory. A low, a higher low, continuation, standard risk, continuation, standard risk, continuation, standard risk, continuation, standard risk, continuation, standard risk. I mean, it's the same boring pattern. It is your friend. The SSC and the collapsing dragon pick the endpoints. COTA 2 gets everything in the middle. Here is, there wasn't much happening in EWZ, so Griff applied the COTA challenge to Estee Lauder on 1 minute. That's a harsh winter. There's an SSC. There's also a COTA 2. There's another COTA 2. That's a standard exit. 1.2. Lather, rinse, and repeat. Just get the ones that are so obvious you can't stand it that you almost feel embarrassed doing it. Nothing wrong with that. Here's 6R from Luke on the Aussie. Two quick scratches, 3 quick scratches, 4 quick scratches. Keep firing. 6, 7.5. Fire, 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 fire. Hit, scratch, hit, 6R. Don't think too much. You know, Nick, if it was me, that would be the pattern and the rule set and the target that I would be trading. You've watched him have 5 months of trading, 2 losing days. Each losing day was less than 1 R. I'm just saying. Wojcik. And he's where you are now, but where 5 months ago, having not ever traded the Aussie dollar before. So here's the WMB3 with COTA 2 and CD. 2 quick losses and a scratch, gets paid. Grinding, gets paid, gets paid. This one we missed. That one should get you paid. This one might have gotten in earlier on the CD. Or on the PSAR flip, I should say. And that would make the difference between a micro losing day and a winning day. And after this consolidation, I'm thinking we got to have another entry here. And I think we let a bunch get away right there. Yep, so those are those. All right, here's EWZ on the simplified pattern, simplified chart this morning at 10. The yellow box is a 20-cent standard risk box on Brazil. For use later on. I'm noticing a low. The MACD has rolled over and is now underneath, so I'm waiting to see that thing hook back up. I'm noticing this as a potential upside. Completely missed everything. I now notice a COTA 2 forming, so I should be very interested in an entry right around in here. Boy, I feel like I should already be long that one right there with this standard risk box. I feel like I should have been on that already. Man, I've missed the opportunity. Oh well. Comes all the way back, puts in another low. Some days you just don't get anything. Ah, here's one. It's now in the afternoon. Come back from lunch and say, well, this thing was just kind of grinding. Now I can look at... doesn't matter what I did or didn't do this morning, but I can notice a series of lows and a slightly higher low. And each, some diminishing small micro moves. So now I can say, I'd like to see it get above this. If I can get this and get above that line, I should be okay. If it can get above that line, I'm not going to lose any money on that trade. And if it gets above here, well then, I think it could really go, because this at least was failure to fail further. It did not break down below here. And it's just getting ready to start the upside move on the MACD. All right. So by this time, I've locked in a little gain. So what I like to do is when I feel this thing take off in that little gap inside there, that little pocket of safety, I like to run it up into here, and there's my support level, and just put this here, and now I've locked in that. Now if it can take off above here, then I probably want to come into that little pocket of safety and then probably put a stop like right in there. Okay. That's how it feels. Pretty close. So on this one, I like to have, now that we've gotten out of the mud. So there's my, slightly higher lows, failure to fail, up the stairs. Now it's cleared resistance. This thing now could really go. So I'll go ahead and put the second position on and then put my stop right here. So if this fails, I don't care. I'll capture all of this on my first position. But I have a really tiny stop on the second position because I don't think it's going to work. And that's the posture I want to be in on 100% of my second entry positions. 100% of the time, that's where I want to be. I want to have about better than an average win. So here's my little risk box. That's my +1. So I've got one in momentum that I really worked hard for. But now I get a second position on with almost no belief in it whatsoever. And it's right at the start of what could be an exceptional move. So I got only upside. If it fails, it's going to fail fast, and I don't care. I'll get paid. But it was like a free lottery ticket. Is it going to work? If it does, I'm getting large gains on 2 positions. Doesn't matter what it did after that. That's the position I want to be in on a second entry. I mean, otherwise, if I don't take that first trade, which I had no reason to believe in it, it had 1, 2, 3, 4 chances to break through this line, and it didn't. So there's nothing special about this one at all. In fact, it didn't even really show me anything except a sort of a nice little willingness to have that kind of a trade. Okay. So I just got to lock in little pieces when I can. And then see the opportunity that I had no belief in whatsoever. And it's just starting into the afternoon, like at 2 p.m. Eastern. That's 100% of what my second positions I aspire to be. Five minutes on the S&P. So now we are at let's see. So this is 5 minute SPY. This was the open. So I wait 1, 2, 3 bars. So that's 15 minutes in. And now this bar, the 15-minute bar close was here. It opened approximately there. The RL10 is decidedly down. The price in the RL10 come out of the dragon. So if you look at the dragon has rolled over. It was impressive going into the close, but now it has rolled over. We're almost 20 minutes in. So I take the short with a standard wrist box here above the hump of the dragon. And this thing, by the end of that bar, is already failing. That feels pretty good. Down here in the second bar, so this is where, after the morning shenanigans, this thing rolled over, comes out of the dragon here, gets me short there, standard wrist box here, fails, opens up here, instantly fails, and closes here 10 minutes later. So that is about, if that's 1 unit of risk, that's about +1, +1. That's about 2R in 10 minutes. So I'm going to lock something in. When I say these things ought to work fast, that's what I mean. They ought to work fast. This bar opens here, makes a slight low, comes back above the close. That's enough. Done. I'll take that trade. Now I'm nervous, so I got to get back into the zero state. So what is this thing going to do? Oh, it just takes off completely, and I completely missed the move to the other side. I was not in the zero state, so I missed that opportunity. If you had gotten in somewhere around here, and you saw it close here, open here, run all the way up to the P-star and start to fail all the way down here, you have to get out right there. If you got long here, you have to get out here because you've given back half the move, and all it did was get to the P-star and fail. So you want to collect that. I didn't take that trade, but there's a lot of good trades I don't take. But now we've got a RL10 that has reversed. It's crossed the baby dragon. That's nice. Let's see what we get. I missed the resumption. Comes all the way back down like it will do in a bear. Makes a double bottom on the RL10s about 90 minutes into the session. Do you have to make sense of every one of these moves and trade every possible thing you can ever possibly get on? Do you have to chase every rabbit in the field? No. Can you wait to see what your best patterns look like? Yeah, you could do that. Bottoming of the RL10, that's not a kata 2. All it's doing is finding support. Are you entitled to believe that this thing could come to here? Like, could it do that? Just like it did here? Just like it sold off and is now just coming through the dry. Could you buy that there with an effort to get that with a tight stop? Yeah, you could. I mean, I could understand. You know, this is on a 5-minute chart. You might have played that on a 1 minute. Right here, I'm interested in it now because now I have, and is now crossing back up. This actually feels pretty good. It's crossed the baby dragon now. RL10 is into the dragon spine. The RL10 has now crossed the dragon. Notice the dragon has started to roll up. If I were to get this here, then it's because I'm front running the move of the PSAR. So if I think that's worth playing for, I might try a tight stop here. I would still use the regular risk box, but I would exit right here. So that's another way to get a low risk idea with even less belief. So ask yourself, would you get long at the yellow dot? If so, what is the name of the pattern? What is the size of your risk box? Would you be playing the standard risk? Would you be playing the accelerated exit there below the belly of the RL10? Or below the belly of the dragon? That's a really risky entry to me. That's an entry I do not make because the dragon has been making lower lows. And this is not higher lows. If I found myself really, really wanting to trade that, then I know that I really, really, really wish I had a position on. And I need to just give my monkey a banana and do something about it. So I just need to know that about myself. So one of the things I might do is figure out how to set this up as a short if I don't want to take that trade. If I do want to take that trade, I can only take it like this. 1 unit of risk, 2 units of reward, and aiming for the top of the, 3 units of reward to the top. Then it's a channel trade or something like that. Okay? That's not a pattern I teach you. That's a pattern that you could frame on your own after 10,000 trades in the bank and confidence in the concept of your MMRB and the fact that you don't believe in that anyway. And you know you're going to get short if it crosses below the dragon anyway. Because if this rolled over, let's suppose you got long right here and this thing immediately started to fail to punish you for trading a pattern we don't have. You have to not only exit here, you got to get short there because now you have a Kata 2. This is the Kata 2 entry. This is the CD entry. Kata 2 if it crosses below here, CD if it crosses below there. So one of the ways that I could not take this trade would be to just set up the trade that I want, which is put a stop order in there and just don't buy the long position. Then I feel like I'm trading, but with a position size of 0. Oh, there's the move right back to the PSAR. Do you buy this one? Do you buy this one out of regret because you didn't take the one that your monkey intuition told you should? If you do, then your professional norm is to set up the risk box here because that's the size of your standard risk box. It's the same size that this risk box would have been if you had taken the first one. So the question to you is, do you take that one with this as a risk box? If so, what's the pattern? It's not a Kata 2 because you don't have higher lows. So have a discussion with yourself and learn how to say no to patterns that are not there. Or if you see enough of these and you say, man, I should be taking that, then you are talking about becoming an advanced hybrid trader who can rapidly frame reward to risk and look for low risk ideas and get your risk out. Because if you had taken this first one, you must, by the time this one hits that line, you must have your risk out and have locked in this much gain. Now all is forgiven. If you had taken either one of those positions, then you must take that one as an exit, because that's +1 on the first one and it's +0.5 on the second one. Now I'm very interested. Why am I now interested? If this price action continues to go like that, then the RL10, which just bottomed out, is going to look like that, which will now make this a COTA 2 somewhere around here or in here. So there's an entry region coming up in here. Now I'm very interested. So I might be able to look at this as a potential bar 1, bar 2, bar 3. So wherever bar 2 closes, whatever the top of that, maybe it's up in here. I'm not sure where it is until we see it. But this next bar in here could be a bar 3. So if I can get a risk box an execution line built right there, I might be willing to take an entry approximately here and then take the size of my standard risk box over here and draw that right here and say, look, that's a -1 execution R, but I'm never going to stick around longer than this line. So I'm really only looking at about a -0.5 execution risk. And then this would be an instant short because of COTA 2 to the downside. So I'm really only taking that much risk. So if this can hold, and if I can see a price as it crosses the dragon, I might be willing to front run that right there. This is on a 5-minute chart. So we're already into the lunch hour and it hasn't failed. So now I see a one, two, potential entry right here, because now when I look down I can see the uptick. So this would be like a WMB3 style, one of the advanced snipers. Nope. The fact that it did not break out and actually made a lower low means that those are no longer 1, 2, 3s. So that's all done. The only thing going for this now is the RL10 is rolling up. So I'm just stalking. Would you take that trade? I now have something like a well-established reversal in the RL10. The dragon has rolled over and is starting to slope up. I'm getting close to front running the PSAR dot, which is now looking like that. An entry from here with a stop down here is a fraction of the standard risk box. The standard risk box is probably something like that. So the question is, would you take that as an entry? You might. Unless you're a disciplined, rules-based trader. Now that is a sniper entry. Why is that a sniper entry? Because it has a clear pattern. PSAR crossing. The dragon is rolled up. I have a standard risk box here. A well-established Kata 2 style. This thing is either going to work right away or it's not. Like, it's got to go through that line and go. Like, if it starts monkeying around and starts to fail, I'm not going to let it come all the way back here or there. Here's a chance for you to go. It goes, starts to fail. I'll take that exit. I'll take that trade 100% of the time. Out of that whole, out of this whole monkeying around, that's the trade I want. Because it's according to my rules. So one of those two exits gets me out. This one is a 1, 2, 3. That one's like a 1, 2, 3 below the real close. This one now, the RL10 is rolled over across the baby dragon. So that's a reason to get out somewhere in that region. You might have re-entered on that yellow dot. Why? Because, well, the RL10 reversed up. Still above the dragon. PSAR is rising. If you get in there, there's your standard risk box. You might decide, and if I do, I'm not going to let it go below the skin of the dragon. Your choice. Not losing money on that trade. If you had taken that trade, you capture that one. You want that trade? You want those two trades. That's sniper work. Short and all the way back down. And then would you exit at the yellow dot? Absolutely yes. Why? Because it came down and is now hesitating right where you are least surprised that it's gonna find support. And you got the easiest single direction move trade of all. Why do I like the short side trade? Because it doesn't monkey around. When it fails fast. That's why if you're taking these long side trades and it doesn't immediately work in your favor and is starting to fail, you get out. Because the failure when it comes is fast, and I want that trade. I don't want to be on the wrong side of the trade that I love. The long side of the trade, that's the, optimism and all that stuff. So there's your flashcard chart on that. The 1/10 of the range stat in the S&P right now is it's at $1.25. That's the size of this box. That's $1.25. Standard risk. Remember, a range stat move in this thing, if that's 1/10, a range stat is $12. So if that thing were to fail, it could fail in a huge way. All right, that's everything I got for tonight.